In this video, we're going to learn how to read candlesticks, and it's going to be very much a beginner-friendly video. So what we're going to do is jump over to my whiteboard and we're going to draw some candlesticks out and look at some charts and fully understand how to read candlesticks and get a good fundamental understanding of how we are going to read these charts. Now, most technical analysts, they agree that in the world of trading, short term, price action is everything that matters. Well, what if you could start understanding and forecasting future price action from just one particular chart? Well, you can, and this is why you need to learn how to read candlesticks. So in the short guide, that's what we're going to do. We're going to review what candlesticks charts are, how you can read them, and how you can understand price movements. We're going to break down the structure of a candlestick and sort of explain everything about the open, the high, the low, and the closing prices. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader, and we are at the stage now where we are studying technical analysis. And the very first topic that we want to sort of cover is candlesticks. So let's jump over to the whiteboard and get the learning going. Okay, so on the whiteboard here, what we have here is a candlestick chart. And when you look at this for the first time, things might be a little bit confusing. It's always like that whenever you're learning a new topic. Things look foreign. You got charts, you've got different graphs, and you've got these candlesticks, and you're sort of wondering, what does all this mean? Well, a candlestick chart, firstly, the first thing that we can talk about is the time frame. So when you're looking at these, you can look at the candlestick chart based on several different time frames. So this particular one we're looking at on the screen here is a daily chart. So at the bottom, you can see we've got all of these candlesticks are represented by one single day. So basically what's happened here on this candlestick, that is the price action of that particular day. This one is the next day, and so on. So what you can do is you can look at it on a daily chart. You can look at candlesticks on a weekly chart. You can get down all the way down to the 1 minute chart. So the time frame when you're looking at these can differ. So you can look and have candles that represent 1 minute. Sometimes they can represent 5 minutes. They can represent 1 day, and so on. So the time frame is the first thing to understand. And that's here on the x-axis. Now, right above that is the volume. So these bars represent the volume of shares that were traded on that particular day. If we look over here for Friday, May 3rd, we can see that the volume was 75 million shares. So on that particular Friday, 75 million shares of Tesla were traded, and then the price right here that it closed at was $181. So the price is on the y-axis here, and then the time frame is on the x-axis here. And these candlesticks represent what has been happening throughout the given time frame. So again, these are daily candles. So we're going to talk about what a candle represents, and then I thought we'd come back to this chart and talk about exactly what's happened right here, where we went all the way down to below 140, and then we jumped back up, and we almost got up to a 200 there within a few days. We're going to talk exactly about what happened there. So let's talk and just briefly go into the specifics of these candlesticks. So firstly, we have the colors. Green represents a bullish candle, whereas red represents a bearish candle, and these can also be white or black, but typically green and red is the most popular. So what happens with a bullish candle is we have an opening price, a closing price, a high price, and a low price. And we want to chart these out on these particular candles. So for a green candle, meaning that it is a bullish candle, meaning that the price has gone up for that particular time period. So again, if we're saying that these candlesticks represent, one particular day, then that means on this particular day, the price started somewhere, finished somewhere else, and basically went up. And that's why this candle is green. Whereas this candle red, meaning that on this particular day, the stock price started at a certain level and actually closed at a lower level. So for green candles, the opening price is going to be the bottom of the candle. That's going to be the open price. And then because it's green, it's bullish, the price moved up throughout the 1 day period, which we're talking about here. And the closing price is going to be right at the top here. So for green candles where it's bullish, the opening price is at the bottom and the closing price is at the top. Now for red candles, it's going to be different because this particular day, the stock was bearish. So this particular time frame, the stock actually went down. So what happens here is the open is going to be represented by the top of the candlestick body. So that's the price that it opened. And then the price that it closed is going to be down at the bottom. So that's going to be the close price. So that is basically how the body of these candles work. So, if we kind of, pretended that Tesla stock, might have opened at 150 down here, and then throughout the trading day, it might have closed here at, let's pretend it was 160, all the way up $10. And then the next day, what happens with the way this candle is looking is Tesla opened at 160, but it finished and it fell all the way down to 150 at the end of the day. So that is what the body represents. Now, these candlesticks also have what are called wicks or shadows or tails. And that is represented by, the wicks that are coming from these candlesticks. And basically what these represent, this is just the highest price that the stock reached in that particular day. And this one is represented by the lowest. And the same thing would apply for the red candle. So for this particular example, this Tesla stock may have opened at 150 and perhaps it went all the way up to 161 or 162. And then it fell down. By the end of the trading day, it finished here at 160. And then perhaps for this particular example, the open was 160. Maybe right at the open, it went up and it went all the way to 161, but then it came all the way down. And then maybe in the afternoon, it went down to maybe 149 and then retraced back up and finished at 150. And that was the closing price. So that is sort of the anatomy of a candlestick. Again, we've got the bullish one. So that means that for this particular time frame, we're just pretending it's 1 day. The stock opened at a low price here of maybe 150 and finished at a price of 160. So it's green. It went up. And then throughout the day, the price maybe dipped down to 149 and went all the way to 162, but finished at 160. And then for this candlestick, it's sort of everything is the same, but it's just a little bit in reverse, whereas the stock price opened at 160 and maybe went up to 161, but throughout the day came down, touched 149, and then closed at 150. So that is how these candlesticks work. So if we kind of look at a chart here, we can kind of see some real life action. Again, this is Tesla back earlier the 2024. So we're kind of looking at December here. So these are daily charts as well. So each candlestick represents 1 day. We're in the month of December. So the stock was, around the 250 mark. So if we look at this particular first day here, we can see it's a green candle stick. So the previous day it is up and it would have opened here right around, 241 and it's gone down to, maybe 240 and a half, and it went all the way up to right around 254, but it closed here at 251. And then the next candle is green as well. And basically, it opened here at the bottom. So here's the open. Maybe it fell a little bit, retraced back up, and then it finished right here. And then the next candle is red. So what that means for this particular one, like we just covered, is that the open here is going to be, remember with the red, that's going to be the open. And because it's red, it actually closes down here. So the stock fell from the prior day. So our prior one, we had an open at the bottom and we had a close at the top. So the stock moved up, but here we open here a little higher and we actually finish down here. But you can see this particular one throughout the day, this was the highest that the stock was. So it opened here and went way up to 259, but actually came down and actually settled back at 252 and a little bit. And then the next price is green. So we've got some bullish movement here. We opened here and we close here. And then the next day we've got a bearish triangle here. So a bearish candlestick. So remember, the red is always open, and then we closed here, and it's red because this day we've closed way down here at 247, and we opened the previous day we closed here at 257. So basically, you can kind of go on and on, but now these candlesticks, you can understand what these represent, and they basically tell a story of what is happening, what the sentiment of the market is for this particular stock on whatever time scale you are looking at. So this is sort of a daily chart here from the end of December, and you can see that the stock was rising a little bit from the middle of December. We were trading here at around 250, and we went up to 263, and then near the end of the year we came back and settled at 250 for this particular stock, Tesla, throughout that month. Now, the other type of candlestick that we have here is called a Dogee Candle. And what this means is that the open and the close price are basically the same. So for this particular one, we've got the open here. So the stock opened at this particular price. And at the end of the trading session, we've got a close that's basically the same or very, very similar. But you can see that the stock may have rose up here and it went all the way down to a low here. But at the end of the day, buyers and sellers couldn't sort of make way either way. And we've sort of been left with a price that is the same as the open. So that is a Dogee candle. And if we look at some real life charts here, I've got one up here and we can kind of see one. Again, this is Tesla and we're on the daily chart here. And this is back in October. So this particular day here, we've got a red candlestick, and the next day we start way down at this particular price here. So 227, and the stock closed the previous session at 243. So this tells you that before, this is sort of in the pre-market, we closed at 243, and then we dropped all the way down to 227, and then we've got a red day here, followed by another red day, and then what we have here is a Dogee candle. So we would have opened this particular day at about 217. We've gone up a little bit, we were down a little bit, and we finished at 217. So that is a Dogee candlestick. So now if we sort of head back to our first chart that we were looking at, now that we sort of understand a little bit about how these candlesticks work, we can just talk really briefly here to wrap up this video about what happened here at sort of the end of April. So again, this is Tesla stock, and you can see that throughout the last few months in this chart, from middle of February through March, we can see we've got a down sort of trend in Tesla, and we've actually went all the way down to a closing low of about 141, and you can see that the bottom wick here was about 138, and so that was the low of the year for Tesla, 138. And you can see here on the 23rd, we finished the stock at about 143 at the end of the day. And what happens the next day is, look at this, we start the day right here at 161. So what happened on this particular day is there was the Tesla earnings call for the first quarter. Many people were pricing in that the earnings call was going to be bad, and the stock fell from the 180s all the way down to 138. The Tesla call was positive in nature. They gave good guidance. And what happens? The stock overnight went from 144 about, or 143, and started the day way up here at 161, and it did some movement, and it finished the day at around 162 or 163, and that's what that big jump is represented by on this particular chart. And then we can see that we've got some other action here. A couple days later, we've got a lot of volume that came in on this particular day, and the stock here was a red candlestick on the previous day at about 68 or so, and then the stock started the next day all the way up at 191. So almost a $30 jump, and basically this was due to some news regarding full self-driving over in China. So there we can see an actual pattern of what happened. We've got the price action leading into this earnings call was very bearish, where the stock went down over the last few months. People were anticipating bad news. The earnings call was actually positive, and the stock has reached and rebounded back up. And then we've got some positive outlook regarding some of their products, and we've got some price action happening here. So that's just one example. But now when we're looking at this chart, we can sort of understand what is happening. We've got these bullish candles followed by bearish candles, and so on, and we can kind of see that this is where the stock opens, this is where the stock closes, and the high price and the low price of the stock on that particular time frame. So that is how you read candlesticks. What our job is going to be next to learn is to sort of understand the patterns that we're going to look for. So there are many patterns where you combine candlesticks and they tell a story of what is happening with the price action, what's happening with the prices, and then what might happen in the future based on the patterns that the prices are doing. And you can sort of relate that to, what's happened in the previous history of the stock. And then just in general, there are many candlestick patterns to learn, which tell a story on what's going to happen next in the stock. And that's going to be, one of the tasks that we need to do when we're learning technical analysis, is to sort of learn these patterns and understand where to see them, and then start charting them and looking for them when we are practicing trading in our paper trading account. So again, I hope that you found this video useful. Learning how to read candlesticks is going to be very important. It's going to be one of the first things that we want to master as we learn more about technical analysis. So thanks so much for watching. Subscribe to the channel, and I will talk to you in the next video.